In this video, we're going to be looking at retained income note on your November 2024 Paper 1 Accounting Grade 12 past paper. This will assist you in preparation to your test as well as the final exam, which will be deciding into whether you're passing accounting or you're failing accounting, and whether you're getting distinction for accounting or you're not getting a distinction for accounting. I'd like you to follow me properly as I go through the question paper. Once we're done with the question paper, we'll then move to the marking guidelines. So marking guideline or marking grid will assist us to determine how they went about getting the answers. So without wasting time, we are only going to be looking at 2.1, and 2.2 and 2.3 will be covered on the separate videos. 2.1 requires to prepare a retained income note for the year ended 29 February 2024. We now know that the year end of this company is 29 February 2024. Now, what are we provided in this extract? We are provided an extract of the Statement of Comprehensive Income for the year ended 29 February 2024. So when we're looking at the information that we have been provided, if we look at all the information that we have, the only information that we're going to need for retained income note is your net profit after tax. Why do we need net profit after tax? It's because it is closer to getting to retained income note. Do we need that information? Yes, we need that information. However, this information, it gives us the final product called net profit after tax, which is very closer to what you're going to need for your retained income note. So now if you're looking at net profit after tax, because you know this is an extract, it's not safe for you to say, in order to calculate the net profit after tax, you're going to say operating profit minus income tax. Why it is not safe to do that? It is because of the two things. Some of the information that we might be provided will be adjusting your operating profit, or could be adjusting your income tax. Therefore, it means that it's not a straightforward answer that you can say operating profit minus tax, then you get net profit after tax. So what is advisable that you do, you digest all the information that you have been provided on the additional information and see whether there is no other additional information that we have been provided by the examiner to arrive closer to net profit after tax. So when you're looking at the Statement of Comprehensive Income, we've realized that the net profit after tax, which we need, it has a question mark. We need to say we need to determine or ascertain the amount for net profit after tax. Then if you're moving to B, we are given the financial statement of financial position. So for the statement of financial position, they've provided us 2 years. It is the previous year end as well as the current year end. So the current year end, what we know about it is that the note we're preparing is for this current year end, which is 29 February 2024. Then we're looking at the information that we've been provided. We are provided cash and cash equivalent. You basically do not need cash and cash equivalent for the purpose of this question for calculating the retained income. And then trading stock, you also don't need that information. The sales information you do not need. Ordinary shareholders equity. So when you're looking at the ordinary shareholders equity, you also do not need for the purpose of calculating the retained income note. You need it for the statement of comprehensive income, but not for retained income note. And an ordinary share capital, you also do not need it for the purpose of calculating retained income. And then when you move down, we are provided the retained income. So for the retained income, we are provided the opening balance. The opening balance, we do need it for the note, because in order for you to calculate the balance, the closing balance, you need to know what the company opened the books with. So in this case, the company opened the books with 573,720. So that will be our opening balance in our note. So that means now we know what we can use when you're looking at the extract B, which has financial position or statement of financial position. However, when you're looking at the closing balance as at 29 February 2024, we do not have the amount. So we do not have amounts for 29 February 2024, and we understand why we don't have, because we are required to make calculation of amount. And then when you look down, we have loan. So we don't need loan for the purpose of calculating the retained income note. And then when you move down, there's a shareholder for dividends. So now you ask yourself, do you need shareholders for dividends in order to get to retained income? Yes, you do. Why you need it? Because a retained income, it's the amount left after the dividends have been paid over to the shareholders. So if there are dividends that have been paid or declared by year end, then we need to consider those dividends when we are calculating or when we want to arrive at the closing balance for the retained income note. So what is happening now on the shareholders' dividends? If we're looking at both current year as well as prior year, we do not have the amount. What does that mean? It means we need to calculate or ascertain the amount. But I know, or we know, that for prior year we do not need it. However, for the current year we need it. Why we do not need it for prior year? Because for prior year, the retained income that you've been provided has already adjusted for those dividends. For that reason, it is not of your concern for the purpose of addressing the question for this video. Then you're going to move down. So when you move down now, they start giving us additional information. So this additional information is what can assist us in order to be able to respond to our retained income note question. Now, if you're looking at what we have here, they are telling us that there is a share capital. So it's a share capital information. And what we are told here, we're told that on 1 March 2023, there were 1.2 million shares in issue. So you ask yourself, do you need this information for retained income? No, it doesn't affect my retained income. Therefore, it's not of my concern. Then when you move down, we're told about the shares that were issued for 10 Rand per share, and it was issued in the current year. Is it of my concern for retained income? No, it doesn't affect my retained income calculation. Then you're going to move down to point 3. We're told that 30 November 2024, 34 shares were repurchased at 1.90 per share above the average share price. So now when you're looking at this information, it is going to affect your P&L. So it is an adjustment to your P&L. Why? Because it is a loss. Why is it a loss? Because we are buying back the shares at above average share price. So it is a loss to the company and it is a gain to who we are buying the shares from. So does it make sense? It is at above the average share price. So let's assume that, let's make assumption that the share price, average share price is 10 Rand, and then that means you are buying back the shares at 11 Rand 90, meaning to say now we are making a loss of 1 Rand 90. It is for that reason this will affect my retained income, or it will affect the company retained income. For that reason, we have to consider this information. And when we move down, we are told now the information about dividends. We're becoming more happier now as we get or ascertain more information for part that has question mark. So when we see on the dividends paid and declared, we are given 3 items. So the first one is final dividends. So the final dividends pertain or relate to the previous year of assessment, which is 28 February 2023. Do I really need them? No, I do not need them. Why? Because they've already been taken into account in my opening balance retained income, which the examiner has already provided to me. Then we're going to look at the second one. It's interim dividends. So you have interim dividends that was paid on 1 September 2023, and the total amount was 416,000. And then when you're looking at the final, which was declared on 29 February 2024, we do not have. That means we have a question, which means we need to have to ascertain or calculate how to arrive at this amount. Now we're looking at the additional information below the table. It says total dividend paid and declared for 29 February 2024 amounted to 744,860. Oh yes, now we're going to be able to get the final dividends. How are we going to be able to get that? Because we know the total is 744,860. Then we need to subtract the interim dividend or the dividend that was paid halfway through the year. So why do you have interim and final dividends? Most companies, they will declare dividends twice a year and pay them twice a year. So for the year, right? So what does that mean? 6 months halfway the year, they prepare the financial statements, and then those financial statements, they will ascertain whether they are able to pay dividends. They will then declare and pay the first batch of dividends, that is called interim, meaning halfway through the year. And then at final year, in this case, at the year end for the company, they will then make the second declaration. Once they make the second declaration, they will then subsequently make the payment. So this case, we didn't know what's the amount. However, since we have the total for the paid, which is the paid one in interim, and declared, which is the one we didn't have, then we can solve for X and find what was the final. And then in that case, you know what is the final declared dividends. Now we are starting to be more happy now because we are getting some of the information, or rather, most of the information that we're gonna need for this retained income note. Then when we're looking at point 2, they're saying the dividends payout rates, or you can say ratio, for the year ended 29 February 2024 was 40% after all transactions were correctly recorded. So what does that mean? It means that it's the 40% of the net profit after tax, which is correct, right? Meaning to say, all the adjustments that were necessary have been corrected. Then 40% was then paid over to the shareholders. So, why is this important for you? It's because it can then assist you to ascertain what is the profit after tax. How we're going to get that? We're going to say 744,860, which is the dividends, divide by 40%. Why are you dividing by 40%? Because in order to arrive at this amount, they had initially said profit after tax times 40%. So you need to inverse that or reverse that in order for you to be able to get to the profit before, after tax rather. So now we're not going to get the profit after tax by saying the dividends, total dividends that was paid and declared for the year, then you multiply by 40% and you get them out. If you're looking at the information provided in E and F, this information is not important for us for the purpose of proceeding with the retained income note. Now that we have this information, we then okay. So now we're going to be looking at the marking guidelines in C, what we have on the marking guidelines, as well as how did they arrive at the amounts that we have as per the marking guidelines. So now if we're looking at marking guideline, we know this was 2.1 and it was retained income note for the year ended 29 February 2020. Now, the opening balance at the beginning of the year, we were provided in this scenario. You just need to bring it in that 573,720. You are not going to be provided the amount or the mark for this information because it's coming straight from your table. However, you need this information in order to arrive at the balance at the end of the year, right? Then, once you have that, you need to calculate your net profit after tax. How are we going to get that amount? We have been told what is the payout ratio and what is the total dividends. As I've said it when we're going through this scenario, you need to divide by 40% because to arrive at this amount, they had to multiply by 40%. So if you multiply back this amount by 40%, you'd get to the amount of dividends. So now since we know the amount for dividends or total dividends, you're going to take that amount and divide by the dividend payout rate. Then you're going to get the net profit after tax, which you need for retained income, of 186 1,862,150. Apologies for that. I do not normally pronounce numbers like millions rand, so it becomes harder sometimes to just say it, as quick as possible because I will normally say 1,862,150, but basically this is 1,862,150. Then we have repurchase of shares. The repurchase of shares will affect our retained income. Why? Because it is a loss, right? So since this is a loss, so now what we're going to do, we're going to have to ascertain how much is that loss. The loss will merely be the extra amount above average price that we paid when we're buying these shares back. So in this case, it 1.9 to 190 cents times 34 shares, and then it gives you 64,600, and it is a minus. And the reason this is a minus, as I have already discussed, it is a loss to the company because the companies are buying back their shares at a price above average share price. So it looks like they are buying at a loss, or they're making loss out of this purchase because they're buying above the average price. And then ordinary share dividends, we have discussed already that it's affecting our retained income. Why? Or the company retained income. Why? Because the amount that is retained, it should be after the dividend has been paid to the shareholders. It is for that reason the ordinary dividend is affecting our balance of retained income at year end. Now, interim dividends, we are provided the amount of 116,000 already in our scenario. So you just bring it in. Just by bringing it in, you're getting a mark, which was very lenient of the examiners for them to give you a mark for bringing in the amounts that you already provided. And then the final dividends, we're not provided the amounts. However, we know how to get the amount because we provided the total dividends. We're going to say total dividends minus the interim dividends or dividends that was paid half year or halfway throughout the year. And then you're going to get 28,860. To get the balance, you're simply going to say the opening balance, you add your net profit. If it was a loss, you're going to subtract, and then you subtract the loss that the company incurred as a result of repurchase, and then you minus your total dividends because that amount needs to be paid over to the ordinary shareholders, and then you'll be left with a balance of 1,626,410. So you can see here you're going to get part mark. Even if this amount is wrong, as long as you can show how you arrived at it, you're going to get part mark. Strange enough, here, even you're going to get part mark. Same here, part mark. So it is very easy to work on this solution if you're working together. So please follow me, subscribe to my channel, follow me on TikTok. I will be posting more videos for your assistant. If you have questions, feel free to ask me, inbox me, chat on the channels. Thank you so much. Enjoy the rest of your day.